Remember, I talk about retesting quite a bit. Let me go ahead and draw the line across. You can see there's the breakout. And the Dow at least broke out to a new high, retested, and then kept pushing up. So what do you see here? Well, you see that the broader markets, okay, the Russell 2000 didn't quite get up to a new high. The S&P 500 got up to the high, but then the Dow 30 actually broke out. Well, what do you think most people are looking at? They're looking at the Dow. Most people look at the Dow as the market. So let me ask you this. If you were a professional and you were trying to get people to buy so you could either sell your long positions or you could go short, what would you want to do? How would you view the market if you were that professional trader? Well, if my whole theory is right, then what you would try and do is push the Dow up in order to get people to buy. Remember, the retail public and a vast majority of the institutions like to buy what's going up, partially because they just don't know any better. Okay, so part of my concern is that the Dow has made a new high, a new all-time high. The S&P did not. The Russell 2000 did not, and also the transportation and utility stocks did not confirm. Okay, so you've got a disconnect here in the overall market. But also, my main concern for equities right now, and I'm not necessarily saying it's time to run for the hills, but I would say at this point you've got to be very careful about the downside. Here are some signs to look for. You want to watch for very high volume. Okay, let's go ahead and go over here, and we're going to put on, this is an average volume here. Now the good thing about the average volume, I'm going to put on just some indicators here. Okay. Now I've got the average volume. Now we have 75% of the volume is the red line. The actual average is the blue line. Then we have 150, 175. Okay, so ever expanding pushes of volume. There are a couple of things you want to look for at highs. Okay, now typically when the market pushes up and it makes a big up day like this on really high volume, that's a bad sign. Okay, generally speaking, that's when the market exhausts itself. That's when all the buyers flood into the market. The professionals see that the buyers are coming in, so they sell to those buyers in order to push the market down. Or I should say the market goes down as an effect of the buyers coming in, because remember, the professional money, if the buyers come in, the professional money is short. Or they've got to liquidate long positions. So typically when you see a big up day, you'll see the market retrace off of that, or at the very least head sideways. It's very rare unless you see a consolidation pattern over here. It's very rare that you just see boom, boom, the market just making these huge days up. Okay? So we want to watch out for the market making any kind of big up days on really big volume. You see a day like this, what you want to watch out for is 150% or 200% of the normal volume, or multiple days in a row with record volume. What you also want to watch out for here, now that the market has pulled back a little bit, you want to watch for a day where the market pushes up, makes a big push up, but then closes well on the low, and you have big volume. Okay, those are just some of the signs you want to look for. Head over to the website, look at the advanced tactics videos. I go over a lot of these patterns there. I just wanted to make a comment about what the broader markets are doing, what I think we should look out for in the future. I'm definitely not bullish on any U.S. equities markets. You've got to look at real inflation is up. I don't care what the CPI says, the Consumer Price Index. I just ate here in the hotel. It was a $60 meal for one person. Now, granted, this is a very nice hotel, but still, $60 for one plate. That's pretty steep. You go to the grocery store, look at bread, look at butter, look at milk, look at hamburger. Everything is up all across the board. So you can't tell me that consumer prices are staying at a very low rate of inflation. Plus, the Fed is dumping liquidity into the marketplace. That's never a good sign for overall growth. Typically, they're restraining liquidity because money is flowing freely. So anyway, there are a lot of concerns out there. I just wanted to point out some of the signs to look for to see what the professional money is doing when they tip their hand to the overall direction of the market.